All right, good morning, guys. Hope all is well. Um, let's try to make this, if possible, an interactive meeting. So ask away. You can speak or just put it on the chat, publicly or privately, and I will answer your question. And the first one that I got, uh, just give me a second here. All right, so first let's go over. Right, so the market was it was a down week this week. I think the S&P was down 2.5%. Um, the IWM hit a little bit harder than most. Let's see here. IWM was down about 6%. So far, year to date, we have the S&P 500 down 22%, down 26, 27 from the 52-week high, and I think we pretty much are below the December 2018 close. So we pretty this whole 30% rally is gone now, gone in a matter of a couple of weeks or a few weeks, and hence the term "stairs up, elevator down." Uh, and I think what worked best this week, besides the inverse shorts, if I go back to my watch list from 327, which I think was last Friday, I think what worked best was some of the shorts. Um, First, we had, this one, let's look at some of the longs was PE, which I did not take, 327 right over here, going through this high. So we had some of the oil names last week, but they just didn't trigger besides a couple. But PE, Devon, Chinese Education, GHL, which is a investment bank that typically focuses on commodities. This thing has been holding up well. And I think we mentioned this at the time that this might do well with oil just because they're into the commodity business in a big way. FTI, again, we were probably just a week too early here with these oil names. But then on the short side, all of these, SGMS, which were the big winners the prior week. LYV, Live Nation, which this is a Corona play, by the way. I don't see how this company. I don't think they're going to have any live concerts soon. So this is a Corona play. Zillow, this one that did well here, down 3 days in a row, but then here as a short did just as good. SQ, and like I said before, for shorting opportunities under this current market environment, the best scan is just the opposite of the down 3 days in a row. The best scan right now is up 3 days in a row or more, and then down, and then through the previous day low. Those two are the best scans if you're looking for opportunities on the long side and the short side. DT was another short, or the same pattern. Okay, so as far as my trading this week, like I put this is all the closing trades. I still have some LABD, which I got stopped out, bought it back. I still have. Just give me a second. Hold on. This is from this week. I still have some SDOW, which is the short Dow Jones. I still have some SQQ, short the Qs, and I still have some short SOXS, along with some of the long ideas, Go, INO, Plan. Those don't count, or they're not in here until I close them out. This is the P&L, right? So this is exactly the way your P&L more than likely is going to look. You're going to go through a period where there's nothing going on. There could be something going on in the market, but maybe you're not in tune with the market. Sometimes you can have the S&P 500 up and it's going up, but you're trading, it's not in tune with the S&P 500. Maybe because you're picking the wrong stocks, maybe your execution is off, or maybe because the S&P 500 is being driven by, the FANG names. Who knows? But this is just like any other chart that we're looking for a tremendous breakout. It's just something like this, a base, nothing going on. You get that huge breakout right over here. This is when things are going really well. You might get a little sloppy. You might have too much confidence, and then you get the rug pull. Now, I don't think this happened because I was overconfident. The market went down. I had some trades, and they all probably just a series of losses, immediate losses, because I was already looking to hedge here. My core holdings, which I normally don't do, my core ETF holdings. When I take a TZA trade or short inverse, I'm not doing it to hedge my individual trade ideas. I do it for, just for direction. But here for the first time, because I saw Tesla going parabolic, I saw space going parabolic, I wanted to hedge my core holdings in the ETFs, which I did. However, I did not hold them long enough. So here you get the rug pull, okay? You get the pullback, and then here, just grinding it out. This is a lot different than this over here. This is a good trading environment here. We're just grinding it out. Less trades, a lot less trades, less size, shorter time frame, and just a little bit tougher. And that's the market. That's the way your P&L is going to look. That's the way most parts and individual names or the market itself. This is the way they look. You got to protect your capital. You got to protect your mental capital and just stay in the game as long as possible until you can figure things out. So let me go with this question here. It says, seems like the probability of trading success during an established downtrend is less likely. As your P&L historically done worse during established downtrend, seems like only bear trades and special situation COVID trades work. Right. Look, it's all relevant, right? So this week, the trading of the individual names wasn't great, but that's going to happen regardless of what the market is doing. Like I just showed you just now, back in December, the market was doing well. I was going sideways. So sometimes you're not going to be in tune with the market. That's just the way things are. So that happens in any market. And it's relevant because there are more than one ways to trade. So I know, a lot of people read, whether, that they wrote all these books. This is a bad trading environment. That's for them. It is. For certain people who actually day trade for a living, it's a different story. For people who actually are actively shorting this market, it's a different story. So it's all relevant. So just because, for example, let's say for example, if I'm having a tough time, it doesn't mean that everyone else is having a tough time. But some people make it seem that way because they believe in their strategy, or they believe that their strategy is the best one and the only one that you can make money on, that they fail to see that people do things differently. So it's all relevant when it comes to trading. There's certain guys right now that are doing extremely well, and what they've done very simply, they shorten the time frame and they've done day trading in shorts. So it all depends on you. I don't do much individual shorting. I just don't. And when I do it, I much rather 8 out of 10 times do it with the inverse ETFs. Okay, so what is it that would make you interested in the weekly trades again? All right, just give me one little second here. Hold on. So the first thing that's happening now is that we are seeing that the ATR, the average true range for the S&P 500, is slightly going down. So this is one of the first things that need to happen for us to start, for me, let me rephrase that, not me, for me to start thinking about longer term weekly trades is for this to go down. This is extremely high. Even if you go back to the previous, meltdowns that we had back in 2015, this is as high as 542. The average true range for the day here, 6. Here was roughly also 6 and change, $7 here. This is coming from a high of $25. So first we need to see this die down a little bit before we start thinking about longer term trades. And for the weekly trades, I'm looking at the same thing, right? I'm looking at, it's pretty much the same scans. Let me just go here. Inside day, down 3 days in a row. Those are the type of scans that I'm looking for. So at some point, we'll get back to the weekly trades, but I'm looking for is long basis. I'm looking for, hold on, let me just try to mute. Hold on, let me just try to mute this so I can, or if you can mute your mic. Just give me a second here. All right. So, and what I'm looking for the weekly trades, the same thing. I'm looking for inside days. This doesn't look like, this looks like a great inside day right over here. You have a stock that's got a big move higher, and then it's trading sideways, prints an inside day. Something like this, I like going through 2095 with a stop right over here. This is exactly what we're looking for when it comes to the weekly trades. All right. And then we're also looking for down 3 weeks in a row. The same exact thing. It's the same thing as the daily charts, just on a longer time frame. So I think that once the ATR goes down, we'll be doing some weekly trades, which is just a longer, kind of like a longer term outlook where we're looking at the weekly charts. We're not looking at the noise from every single day. And we're in the weekly charts, the weekly ideas come out once a week before the market opens on Monday. And we're going by the weekly candles, which are much easier to follow. It's much easier to take all the trades. And for a majority of the people, it's a little bit, it fits their personality a little bit more. Most people don't like taking losses immediately. Some people don't mind taking a loss 3 months down the road, but taking a loss in a matter of hours or days is something that most people in the beginning could not handle, which is fine. I've been thinking about getting into shorts. Would you recommend keeping short funds separate from what I use for long trades? No. I think it should be all the same. I mean, long, shorts, a trade is a trade. So I think, yeah, no, a trade is a trade. I mean, you're doing long ideas, short ideas. At the end of the day, what you want to do is make money. That's the way I look at it for long and short trades. For my core holdings, I view that a little bit differently. I got a long-term, forever mind frame for that. And all I'm thinking about is adding on the way down, which I've stopped, and then taking some of the fat off once we get the rip higher, whenever that comes. Let's see. Any other questions? About the trading, about the ideas, the watch list. When I have the watch list, for example, there's certain times in the morning, if I'm around, I'm going through these names early in the morning, pretty much nonstop. The alerts go off. I'm either going to take them or not take them. This week, I practice a lot more discretion than I usually do because we've been talking about the market being below the 5-day moving average, which is something that I only look at when we are in the correction. So when the market is below the 5-day moving average, you got to give the bears the benefit of the doubt. They have the ball. They are in control. So you have to be a little bit more careful, when you buy, what you're buying, how much you're holding, for how long. So usually in the corrective market, when we're below, I am a little bit more careful. When we are above, like we were last week, it's a different story. So you have to keep this in mind every single day. But more importantly, when it comes to the daily watch list, okay, What I'm looking for is just this type of rip higher, a 3 to 4 or 5 day move. I want to jump off this trade as it goes higher and then move on to something else that's just getting started. That is what swing trading, what daily swing trading is to me. What I'm looking to do here is capture as many of these trades as possible throughout the year. Okay, these daily swings that are going to last 3, 5, 6 days. On the weekly time frame, we're looking for less trades, but usually a longer time frame and hopefully a bigger return. Just because you hold on to something for a long time doesn't mean that you're going to make big money. And we saw that you can see it with a lot of names. LK, here's a stock that had a nice breakout. People were talking about it, earnings, blah, blah, blah. Everyone's getting involved. And then usually this is when people want to become long-term holders. Here I had people, they want to become long-term holders, hold the piece forever. And then this happens. And then when this happens, then they're selling, their winners in the matter when they're up 10 cents. That's just a cycle of the market. If you look at, for example, Netflix, which I mentioned this morning, people want to hold for the long term. But look, it had this tremendous move and it's been trading sideways for a year and a half. So these are things you want to think about. When it comes to swing trading, you're in the moving business. You want to move your capital and you want to, take advantage of that short-term run as many times as possible. What's your exit criteria for daily swings? You sell on the way up. So we already know beforehand what the exit criteria if it goes against us. That's the stop loss. We know that right off the bat. That doesn't change. On the way up, we are looking to sell on the way up. Normally, on a regular market where the market is doing well, you're looking to sell on the way up in days 3, 4, 5. All right. So if you look at, even when you look at some of the old, study articles by IBD, which everyone loves to quote, they say, they have the 27 rule where you should be taking most of your gains at 20%. And then keep your stop losses at 7%, right? And the reason why is because according to their studies, most stocks, they tend to stall out at the 20% marker. So since they're swing traders, they don't want to sit through consolidations nor downtrends. So they get off and they get involved in something else. As the market has changed over the last few years, and we were not seeing those tremendous gains anymore. That's when they came out with their swing, what do you call it? Their swing service, where they were looking for less gains. They were looking for 10% moves using a 3% stop loss. Let me see if I can bring it up here somewhere. And that's because the market was not giving them that, those gains that they were used to before. So I like to sell on the way up. But because of this market, you're getting these 10 to 20% moves in a matter of a day like you did here. So you got to take that off the table immediately. Where is it? Okay, here it is. A simple strategy, we go for quick hits. Most trades will last 5 to 10 days in a strong market. The profit goal is about 10%, and the upside on the upside with a stop loss around 3%. This is what swing trading is. The problem is that we read all these books, and all these people are coming out with, I flagged the breakout here, and the stock went up 1,000% after that. But then once you start, if they ever reveal their numbers, you'll see that their average winning trade is roughly 15%. All right. So this is what people are doing. It sells a little bit better when you're able to show that you held on to 2 stocks and went up 1,000%, but that's not exactly the way it works. It's a lot easier, in my opinion, to find 110% trades than to find two 100% winners. Because in hindsight, you can see, it looks great. The chart went straight up. What they don't show you is, how do you feel by holding through earnings that you have no idea what's going to happen? What are your feelings when you're up 50%? Can you handle a 25% drawdown and lose half your gains? Can you hold that for the next, or are you going to sell when you get back to that plus 50%? You're going to hold on to it. These are things that are not easy. Okay. And it takes a special kind of personality to stick to those type of things. And it's possible, and it can very well be done with the weekly ideas. That's exactly what I try to do, is get a weekly trade and take half off at the one-time target. So let's say, for example, I'm taking a weekly trade. The buy stop is at $50 and the sell stop is at $40. So with the weekly trades, I'm taking half off at 1x, which is just the $10. I'm taking that risk off at $60. And then the other half, I'm either going to put a stop at break even, right? And then let's see how far it'll take us. Or you can just follow it with a 2.5 times ATR. So that's how I like to do the weekly trade. So you kind of like become a trend follower. However, you take away that last piece that hurt a lot of trend followers, which is that at the very end of the move, they lose half their gains because, they have something like this. Like, let me just show you Tesla. Tesla is one when it was here, major, whatever publication said, hey, it's okay. This thing is fine until it breaks the 10-week moving average. The 10-week moving average, when the stock was trading at 900, was roughly 400 points away. So that's where trend following, in my opinion, the old school trend following fails. That when they see a stock go parabolic, they're going to wait all the way until it gets below the 10-week or 200-day moving average to actually sell, and you end up losing half your gains. So the trend following, you should, in my opinion, you can take off half at one time risk, and then follow it with a trailing stop that moves higher as the stock moves higher, or just keep the stop at break even and see how far it takes you. I'd rather sell half at one-time risk. In a good market, you could make in the market, in the next bull market that we're going to go into, off the bottom, you're going to want to take the weekly trade, and instead of taking off at one-time risk, take off half at 2 times risk. Because once we come off that bottom, the gains are going to be a lot stronger off the bottom. So that's that. Let's see here. Okay. All right. So the exit strategy with the swing trades, I'm looking to sell these things on the way up. I'm looking to ride these things for 3 to 5 days. That's just the way most of these stocks trade. They go up in little small bursts that'll last 3 to 5 days. What you get in that little small burst, a lot of it depends on what the market is doing. If we got a great market, you might get 10, 20, 25%. You got a shaky market, you might get a lot less. That's all depending on what the market environment, what the market is doing at the time. For this one particular scan, the down 3 days in a row scan, these things also normally last 3 to 5 days, where let's see here, SPG, what was a good one? Where with the down 3 days in a row scan, what you're doing is you're buying, you're waiting, if you can, until the pattern changes. So you have a stock that's down 1, 2, 3, 4, 5, 6 days in a row, lower highs and lower lows. That pattern changes, and then you would have been in this trade for 1, 2, 3 days, 4 days. You would have been stopped out here. So a lot of it depends on the market and the scan. For the down 3 days in a row, like I said, the pattern is very simple. you can hold on to the stock until it breaks the previous day low. For example, here down 1, 2, 3 days in a row, the buy stop is right over here at 996, 10 cents above this high. The initial stop is at 877, and then the stock goes up. The stop goes up to 983, and if you just follow this one, simple rule, just sell when it breaks the previous day low. On this particular trade, you would still be in the trade until it breaks the previous day low. This can last 4 days, 5 days, 6 days, 10 days. No one really knows. For me, I like to sell on the way up, and I like to get rid of most of my inventory by days 4 or 5 when it comes to this type of trading. Hopefully that answers your question. What percent do you reduce trade positions during markets? Okay, what percent do you reduce trade positions during markets like this compared to? Okay, right. So in this market, this 3 to 5 day move, you're getting in 1 day. So if I'm looking to get involved in the trade, and in the regular market, because the ATR, because the SPY ATR is at 2, maybe it'll take a little small cap company 3 to 5 days to make a 10 to 20% move. Okay, now you're getting that 10 to 20% move in 1 day. And that's the reason why over the last couple of videos I've been saying, reduce your size because of the market environment, and because of the volatility of the market, your time frame will also be reduced as well because of the market, because you're getting the gains quicker and you're getting the stop outs quicker. All right, so I was in a webinar where IBD was promoting their swing trader, right? Similar, yeah. Look, swing trading and swing trading. There's no secret. I think the only difference is the beliefs when it comes to swing trading. Certain people believe that swing trading, the stock has to be above the 50-day moving average and the 200-day moving average. That the stock has to make money. Those are some of the differences. You can do a lot of criteria. You can put a whole bunch of filters when you're looking to scan, and you can change the narrative, the universe, however you want. But stocks go up from 52-week lows, 52-week highs, from everywhere. And there's a difference. There's a big difference between the best performing stocks and the best growth stocks and the strongest stocks. There's a tremendous difference. And usually that lies within your time frame. It's irrelevant to me that Docu is the strongest stock in the market because it's held up well. Within my time frame, it means nothing at all. Okay, I'm looking to get involved in the best performance stocks within my time frame, and this one doesn't fit the criteria. So does it have great numbers? Yeah, it probably has great numbers, but it doesn't make a difference when it comes to swing trading. When it comes to short-term swing trading, what matters the most is momentum and mean reversion. Okay, if I can show you, for example, the best performance stocks this week in the S&P 500. And what we have here this past week, it's all the energy names: Devon Energy, FANG, another oil stock, mostly all the oil stocks that have been trading near the lows. And so far, the best performing stocks as far as percentage gains have been the stocks that have been beaten up the most, not the ones that have held up the best. All right, we're in it to make money, not to say, hey, I'm holding on to the strongest stock. That doesn't mean anything going forward. This market environment, offer these corrective bounces, what works best are the stocks that are beaten up the most. Now, I can go here and say, these are the best performing S&P 500 companies. I can start putting a filter and say price has to be above 15. And then I'll get a totally different list. I can put another filter. Well, I've read in this book that the best performing stocks have whatever, make money. I can put a filter. You have to, make a certain amount of money, and I'll get a different list. It doesn't show me the true essence of the market. So that's that. For the previous day high, if the stock had a $5 previous high, do you enter right at the initial? All right, for the previous day high entry, if a stock had a $5 previous high, do you? All right, so right. Lately, because we've had high volatility, some of the buy stops have been, have been far away. We saw that, for example, here, this is Duke Energy. This is not the stock doesn't move a lot, but we can, here the stock closed at 64.15 and the buy stop was 68.03. That's roughly $4. And even if you chased it, even if you bought it, which I did at 68.48, it still had a big move. And the reason why is because the market, the ATR, the average true range for every stock is just higher. When I go back and let me just show you something here, if I can find it. And I'm going to show you something. So you have to take into consideration the type of market you're in. You're in the market where the average true range is just a little bit higher and you have no choice but to pay up for some of these things. But let me just show you, if I can find it here, some of the notes that I made in some of the recent trades here. Buy stop $4 away, and it still had a tremendous move. And this buy stop 11 points away, and it still had a tremendous move. This is what we've seen over the last couple of weeks, and that's just a product of the market. So you have to take in consideration what the market is doing currently. On the normal on the regular market where the ATR is just whatever it is, 2 for the SPY, then I would not buy this. I would not buy a stock that's whose buy stop is 11 points away. But it's a different market, so you have to take that into consideration. I hope that answered your question. Do you think there is edge in reading the tape? Level 2, I have not used or seen level 2 since 1999. So is there an edge reading the tape? Yes, certain people I think have an edge reading the tape. Day traders might have an edge reading the tape. That's not something that I focus on. So yeah, I look at. There are just too many beliefs out there about certain things. I don't day trade. I don't think it's bad. I don't think day trading is for losers or anything like that. Everyone has their own little niche, and it can be done. It can be done, but you have to believe. I mean, like Van Tharp said in his book, one of his books, Super Traders, we don't trade the market. We trade our beliefs about the market. I'm not a tape reader. I don't look for day trades. But even if I did look for day trades, my scans will be the same, just on a lower time frame. I will look for the same exact thing. I will look for this type of setup on a lower time frame. CodeX is up $3 after hours. You start to, yes. Unfortunately, this stock was on the list. Where was the stock on the list? CODX must have been here somewhere on 4.2. Yeah, I know that they something with the FDA. Okay, so this was good news in the aftermarket. Somewhat negative news came out on INO. They filed for a $150 million shelf offering. Wait till market opens. And secondly, do you ever buy more after the initial sell-off or after the initial? Right. So no, right. So look, in trading, you have to find solutions. All right. So CODX being up 3 in the after hours, I would definitely sell some. All right. The only way that you can, there's no right or wrong way. And a lot of it has to do with the current market environment. So If you look at INO, it had some news, sold off, right? APT, we got involved here, has some, I think some news or maybe no news, and then it sold off. And in hindsight, this looks like, oh, that's a bad sale. But we were up 40, 50%. But if you take a look at the pullback from this high to here, that's a 20% pullback. It doesn't seem like a lot, but it's a lot when you're in it. Okay. So I'm a believer in selling on the way up. Number one. Number two, I'm a believer in using discretion for a piece and then being mechanical with the rest. And what that means very simply is if we're looking at a weekly trade, you want to take half off at one risk, and then you leave the rest and just allow the market to take you out. So with CODX, you can sell some pre-market, and then the other half just trail it with a stop or just pre-sell it. There is no right or wrong way, but I think if you do a combination of sell orders and sell stops, I think you'll do okay. So there's no right or wrong way in my opinion, but you got to take the market environment into account. Is in the current market environment, are the gains being lost immediately after? Are the gains, are stocks, are they continuing to run on a consistent basis? That all depends. For example, in January, you're going to go into certain market environments where you sold, here, and then the stock continued to go higher. That was that market. This market is a little bit different, so take that into account. And secondly, do you ever buy more after the initial sell? No. So I don't go from a daily time frame on the stock to an intraday to try to buy more. I don't do that with individual trades. What I'm looking for is I'm looking for that 3 to 5 day move. Whatever the market gives me within that time frame it's exactly what I'm going to take, and I'm going to move on to the rest. Okay, and what you want to do is when you look at charts is you're going to realize that most of these moves are going to last a very short time frame. They're going to be 3, 5, 6, maybe 10 days at the maximum, and then you're going to have sideways action. And for me, for my daily swings, I much rather avoid this sideways action 10 to 15 days and get involved in something that's just getting started and do that over and over and over again. That's my level of thinking when it comes to the daily swing ideas. All right. Anything else? What else do you guys have in mind? Any recommendation on the news website or app for the stuff that doesn't show up on something like Finviz or Yahoo? Right. I mean, it all depends. I don't trade off news. So news doesn't matter to me. Are you looking at trade off news? Like something comes out and you want to trade off that news? Is that what you want? Yeah, just let me know. I don't trade off news. And the paid services, the paid news is Trade the News is one. I would like to get to the point of feeling comfortable without. Okay, right. So right. Right. Let me tell. Right. Listen, and that's how you find solutions for your trading, right? You have to at some point understand what matters and what doesn't matter within your time frame. Okay, and what ends up happening is when you start reading news, usually the way it happens is you buy a stock, you buy it for a trade and it goes down, then you start reading the news and you start selling yourself on how great the company is, and that makes you feel comfortable. All that says very simply is that you are not comfortable taking losses. And believe me when I tell you, in the bull market, all your sins will be forgiven. In the bear market, you're going to get crushed. I know people personally, okay, that own this LK at a much higher level. And because they didn't want to take a loss for whatever reason, maybe because they just had 10 straight losers and they didn't want to take another loss, they kept and they held on to it. Okay. Tesla, same exact thing. They get involved, stock is going up, and because they saw LK go up and that went through the roof, they're going to buy this one because they think it's going to happen also immediately. The stock breaks down, they don't want to take another loss, and now they're stuck. So so the news, and so no, so and that's the reason why, if you look, I was a broker for a long time, since from 1999 or 98, whenever it was, and we used to subscribe to, the IBD or other services, okay, and people used to love, the IBD or whatever it is, because you got so into, the company's making money, their earnings are up 25%, up 30, 40, 50%. That all, it just makes, it sounds great. The problem that brokers had was they had a problem selling the stocks as they broke down, because they started to believe in the numbers. They started to believe in the earnings per share. It's a great company. It's a great company. And that's why those people had a sour taste in regards to, IBD or other stuff that promotes earnings per share, because the story makes a lot of sense. Even just recently, not recently, but years ago, one of the most famous bloggers now that doesn't do active trading anymore, used to write a technical page. Back then, we had something called JAG notes. JAG notes used to be faxed over every morning, 2 or 3 pages long, of certain people throughout the street, technical analysts, fundamentals, insider buying. Every morning, we used to get these JAG notes faxed over to the firm. And I remember one day, this is a famous blogger right now that used to write for TheStreet.com. Now only does whatever, asset allocation. So they used to write this old technical analysis, whatever, going through, we like XYZ, going through 24, and we got to stop here. That wasn't sexy enough. They were looking for a person to write a story about the stock, because that was sexier, and people like to read stories. They like to believe in stories. So you got to get yourself comfortable and ask yourself, just by studying what works best within your time frame, whether news matters. If you are a day trader, then news matter. If you are like an active day trader, then you need a news feed like Trade the News, like Briefing, The Fly, or Bloomberg, because normally what people do when they day trade is they're buying the stocks that are in play that day, and the stocks that are normally in play for any particular day, they usually have news. So you need news for that. And what percent do you dispose shares on the way up? Okay, that also depends on the market, and it depends on the vehicle. So if I'm looking for a short, if I have a small cap company with a low float, okay, then I'm going to sell some of 10%, 15%, 20%. I'm going to sell some on the way up, and then I'm going to trail some underneath, just in case it doesn't get to those targets. Okay, if you have a large cap company like a Tesla, then you can't use percentage gains. This stock doesn't move in 10% increments. It moves in dollars. So now you have to use $5, $10, $15, $20. You want to do that. I don't use ATRs, but you can also use an ATR as as an idea of maybe, if the ATR, if a 1 day ATR is whatever, $20, maybe you're looking for a $20 move to take that initial risk off. So I like to sell on the way up. A lot has to do with the market environment. You can do it mechanically, where you can say, hey, I'm going to take half off at 1x. 1x being that if you have a buy stop at $50, and your initial sell stop is 48, you're risking 2. 1x would be $2 above your buy stop 52. You can sell some at 52 and then raise the stop to break even, or you can just sell on the way up. A lot of it depends, again, what you're going to get out of the market depends on what's going on in the market environment. For big cap companies, I'm using dollar gains. For small companies, small flow, I'm using percentage gains. And I'm also seeing what is happening. This is the reason why my rolling 5-day watch list is important, because it tells me how things are moving. Are they giving up the gains on day 2 or day 3? Should I be taking off more on day 1? Should I be holding off for a little bit longer? These are all things that your rolling 5-day watch list would tell you when it comes to trading. This is the reason why this is my main screen here. I don't have the indices. I only have the indices here because I'm short the Qs via the SQQ. And because this market environment has been so volatile, I'm not using technical analysis on the SQQ. I'm looking at the Qs instead to buy the SQQ, because they're just, due to the current environment, they're just completely different. So, and what you want to do is you want to take a look at the best performing stocks within your time frame, and you want to see how they move. And you start taking some of those commonalities and you start jotting these things down and say, okay, most of the gains are petering out by day 5. Most of the gains are coming by day 3. These are things you got to do on your own to see what works and what doesn't work. Okay. In a bear market, like a real bear market, where you just trade inside day and down up 3 days in a row and down to there, okay, so in a bear market, like a real bear market, would you just trade inside day and down 3 and up to, right? So right now in this bear market, what's working best is, those are the 2 things that are working best. I wouldn't say inside day that much. Although you're gonna have stocks that are down 3 days in a row, they print an inside day and then you buy it through that high. So that's pretty much the same scan. But right now, for short-term trades, what's working best are the beaten up names. And look, you can just clearly see that for the most part by looking at the best performing stocks. Wayfair, okay, down to 30, thing almost doubles. This is not looking bad here. On a regular bull market, this is a nice little setup, okay? You have a stock that has a lot of momentum. How do we know that? Stock is up 150% in a matter of 5 days. You can actually call this a high tie flag, okay? Based on the IBD definition, which is any stock that's up 80 to 120% up 80 to 120% in a matter of 5 weeks. And then the consolidation, you can call this a high tie flag. In a good bull market, this will be a very nice setup going through this high. But you can see here what's working. The stocks that have been beaten up the most, okay? All right, and these are, depending on your time frame, if you have a short-term time frame, if your swing time frame is 3 to 5, 10 days, these are some significant moves, okay? And these moves, these percentage gains, they're worth the same, regardless if they're trading at highs, lows, and all these things. These people come out with all these, they have these belief systems that the only moves that count are the ones that are trading near highs. That is not the case. So if you look at the best performance stocks this week, FANG, or the last 10 days, FANG, and you can see it, there's been some opportunities here. This stock, you would have had this stock on the down 3 days in a row scan. This is the actual trigger through this high. So this would have been one of your scans, CTSL, whatever this is. But most of these stocks would have came out in one of those 2 scans, more than likely. Could have been an inside day here, down 3 days in a row, would have hit the scan right there. Vapo down 3 days in a row here, would have hit the scan on this day, would have hit the scan over here. We bought it here in the inside day. So those 2 scans in this current market environment are going to catch a lot of the moves. As far as shorting is concerned, the opposite side, the best performing stocks have been the ones that were up multiple days in a row. They had the dead cat bounce and then they cratered. That's what's working in this market. 3 months down the road, if we bottom today, then 3 months down the road, the stocks that held up really, really well are going to have that breakout. That's when you're going to start finding the leaders, not off the initial bounce. On the right side of your charts, the up is the buy limit, is the low price your stop loss if you enter the trade or cut off. Okay. On the right side of your charts, the up is the buy limit, is the low price your stop loss if you enter the trade or a cutoff to not buy anything lower. I'm not sure I quite get your question, but let's go to the watch list. All right, so LB, the buy stop, this was in the down 3 days in a row scan, down 1, 2, 3, 4, 5, 6 days in a row. So here the buy stop would have been $10.33. The initial stop is $9.32. And then at the close of Friday, the stop goes from $9.32 to this low, which is $10.11. So if it doesn't go through this previous day high, then it's not a buy for me. Same thing with MTH, down multiple days in a row. The buy stop here was 32.29. Here it went through that high. That's a trigger. The initial stop is over here at 28.94, and then it goes up to 30.25. Does that answer your question? What is the 1624 on the right side of the chart of LB? 1624. What is the 1624 on the right? Yeah, I'm not sure what you're talking about with on the right side of the chart for LB with a little up chart. Oh no. No. Okay, this is the bid and the ask. This is the bid and the ask. This is not this is just the stock is closed. The bid and the ask. There's a bid right now for 1054. There's an ask of 1674. It means nothing at all. That's just the bid and the ask. So for example, here you see that, and you see here bid, ask, and last trade. You go to MTH, New York Stock Exchange issue, no bid ask. INO, here's the bid ask, 740 by 742, last trade 774. That's what that is. Yeah, no, that's what that is. Look, this looks good again. All right, so this will be on the list on Monday. Another inside day. Buy stop 2010. Initial stop. You give it some room over here, $17 a share. Now that's far away, but that's what the market calls for. And again, this stock printed an inside day on 490,000 shares, which is a very low amount since the 20-day moving average is 981. And this is what I call, under normal circumstances, an A+ setup. Okay, here we have a stock, and this is going to be one of our main setups once the market turns around. Here we have a stock that no one knows about, trades 2,000 shares a day, trading at $1.38, and then suddenly news comes out, and the stock trades 11 million shares that day. The next day, it trades 2.7 million shares. This was on the back of some news. News happens to be coronavirus. And what ends up happening is that you have a consolidation of 10 to 15 days. The candles, they start to contract. Here you have an inside day. This is the trigger candle. Not only do you have an inside day, but you have an inside day on extremely low volume, 343,000 shares. This is an A setup. So here's where the inside day comes into play with a fresh momentum name. And then you have the other setup, down multiple days in a row. Look at this candle. Contraction. Volume, extremely low. We bought the stock here going through this high, and the stock goes from whatever it is, 14.37 was my buy stop, and it goes up to $21 and even higher, I think, pre-market. And now we have another setup here where we got the contraction again, a double inside day. So this is where it comes from. This is the reason why you need to study these scans, make them your own, and understand how it works. Like, for example, I have here a bunch of stickies, and the stickies are, uh, by the way, this sideways action, 10 to 15 days. For those, that's 3-week type pattern is what some other people call it. Okay. Some people might call it volatility contraction, whatever it is. It's all the same thing. They just give it different names. But this is an A plus setup. This is where the inside day scan comes in, where you have a stock that has fresh momentum and it consolidates and prints a very tight candle on very low volume, and that is the trigger candle. Does that automatically show up on TC2000? The bid and ask? I don't know. I'm not sure. I think you have to. I think you have to. If you click here and you press edit toolbars, you can add things like the bid and ask. Like here, I have open bar, bar high. You can add these things, and then you can make them visible. And then those two things, and then you get those little two blue lines there. Any other questions? This is the best way to get up to date. But again, short term, momentum, mean reversion. That's what drives stocks in the short term. Longer term, longer time frame, 1 year, 2 years, 3 years. That's when what the company does, what they're doing, earnings, that's when that matters a little bit more when you have a longer time frame. I'm not a big fan of basing buy orders based on earnings. If for some reason or another, I'm going to sell that stock before the quarter is over. So in other words, if you're buying a stock because of earnings, those earnings only change once a quarter. And if those earnings are great and they only change once a quarter, if the stock goes down, in my eyes, the way I believe is that's not a sell. It just created a better buying opportunity because you're buying a stock that has great earnings that just pull back 20%. That's the way I think. And that's the reason why I believe that in the short term, earnings and a lot of things don't matter except momentum and mean reversion. On inside days, what are you looking for to decide to go long and short, right? So the inside days, for the most part, I specifically use them for long ideas, although you can use them for short ideas, okay? What I'm looking for is exactly what I just showed you with the AHPI for the most part. This is an A plus setup, okay, on the normal market conditions. Big up move, right, which is fresh momentum. Stock is young, fresh momentum. You get a sideways action, 10 to 15 days. You get a contraction of volume. The inside day just tells you that the buying and selling is pretty much done and we're ready to move higher. And usually contraction leads to expansion in the direction of the previous move, in this case, which is up. So when I'm looking at the inside day list, so this right here, this will be a buy for me. Let me just go through the inside day list. So a lot of it has to do with, like, for example, here's an inside day. Here's a bearish inside day for me. Why? We have a stock that is up from 15 to 18. Resistance right above. Under the current market environment, this is a scan or a setup that's working well on the short side. So here's an inside day. The stock is done going higher. It's tired. And then my trigger price will be between this low over here, right? So this is how I will use an inside day on the short side. WLK, specialty chemicals. You can use this in both directions, upside or downside. For me, this would be a long trade going through 36.21. So an inside day, it's just indecision. You can use it on both sides. I use it for the most part on the long side because you just have more opportunities on the long side. All right. We just have longer bull markets than bear markets. And the majority of the opportunities are going to come on the long side. So I usually only use it on the long side, but you can use it on the short side. And how would I use it on the short side? You can either go through the entire list like I normally do, or you can add the inside day and look at this list right here. Here's a list that has all the stocks that are down 3 days in a row and printed an inside day. So I combine these two together. So you can use this one, and then that narrows down the list from 476 names to 106 names. So now I'm looking at all the ones that had a very tight candle, which probably means that that move is going to be over. And that's when you're going to get that expansion. That's what the inside day means to me. It's a candle that's indecisive, which tells you that more than likely we're going to get an expansion candle. From contraction comes expansion. You can say from, volatility contraction, you get the expansion. It's a springboard. So that's what the inside day means. Now, all you have to do is get the right pattern. Okay. So this is a way you can do it as well, where you can combine two scans into one, and you can narrow down the list. So what I normally do is that I might go through this list first, right? Because since I know that I like these candles, or I might go through this list first and then just double check here on this one. Okay. So inside day, indecision, all it tells you is very simply, we're very close to an expansion. Hopefully that answers your question on, okay. So again, deciding to go long and short depends on the pattern. Depends on the pattern. So if I'm getting an inside day and the stock is up 7 days in a row, I want to go short. I'm not looking to go to have a follow through that's going to go higher. Like for example, let's see here. This stock here almost printed in, here. If I catch this inside day here, this is not a long setup for me. This is more of a short setup or just leave it alone. It's on a long setup. Why? Because the stock is already up multiple days in a row. Okay. And you don't want to chase stocks. And the reason why, the cookie cutter breakout, technical analysis breakout, looks at a chart like this and says, hey, it's breaking this previous high. So this is going to be a good breakout. No, it already spent so much energy going from 40 to 65 that it's got nothing left. So this inside day here for me is not a bullish candle. I will play it as a bearish candle or as a leave it alone candle. Okay. Hopefully that makes sense. Any other questions? I got into Snap yesterday right above the day's low. It looked as if it was being the third. Okay. I got into Snap yesterday right above the day's low. I looked at it as Friday being the third consolidation. That you think I got to, right. Look, do I think you got ahead of yourself based on my beliefs? Yes. Right. That doesn't make it right or wrong. But let me just, for example, when I do the down 3 days in a row scan, the reason why 99% of the times I don't buy on the way down until I see the change is because 3 days can turn into 4 days, 4 days can turn into 5 days, 5 days can turn into 6 days. And the times that I do, which is extremely rare, that I do buy it before it turns, I always buy a little bit. Not only do I buy a little bit, but when I make a note on the chart, I then make my note here, I would put down 3 days in a row, anticipating a move higher. right? So I make sure I put that in the note, and I make sure I put that in TradingView, and I tag it differently. So in my TradingView, I have a tag that says down 3 days in a row through previous high, right? And I also have one that says down 3 days in a row anticipating. So so anticipation like that on the snap might work. It's not for me. I want to go. I want to buy a stock going through going higher, going through some type of momentum. The momentum to me is just going through the previous day high. And some people, because support is only potential support. It doesn't have to, if the stock bounced off of 10 every single time, it doesn't mean that's going to bounce off 10 right now again. And sometimes, usually when people do this, it's because they want to save a couple of pennies or 10 cents a quarter. They want to get involved, first. I don't look at it that way. I want to buy it on the way up 99% of the times. But you have to take notes of these things, and you have to write down why you bought the stock. What was it that made you buy Snap? Okay. I can put this on a list on Monday, right? And what I will put is got long going through the previous day high, possible character change. Why? These are the 10, this white dotted line is the 10-day moving average. Here's the 20-day moving average. As you can see, resistance, resistance, resistance. It finally gets above. The averages are starting to curl higher, and this could be a possible change of character. Certain stocks trade really well with the moving averages. I don't know if this one's going to be one of them, but some of them do. But you have to take these notes down. Like when I do trades, you can see all the notes here. They're not, there's just the reason why I bought them. Okay. Reason why I bought the trades. And then I tag them. And then I'm able to know what's working, what's not working. What am I doing right? What am I doing wrong? That's important. Any other questions? Look, Zoom, right? Not a bad setup. Down 1, 2, 3, 4 days in a row. Print an inside day. I don't think it's a bad setup. It's a Y candle. Again, it's because of the market. Something like this, buy stop 128.58. Sell stop right over here, right below this candle. Right. And speaking of Zoom, do you think all these Zoom bombs are going to? Geez. Right. So here's a situation that I know what's going on because I just happened to stumble upon the problem with Zoom. And because I just stumbled upon the problem with Zoom, I wouldn't take this trade. That's a humongous problem. That is a huge problem for the most part, right? I guess if it's private, you're okay. I think. But, like you read and I read that some schools, even some schools have, even private meetings have bombings, right? Zoom, and people were just, chiming in and just going in. That's a huge problem. So because of that, I wouldn't take the trade. Now, I saw that they had an update over the last couple of days, and I did not update the latest update. So maybe that fixes it. But that is a humongous problem. I don't know. That's a huge problem. I mean, so even if you get if someone got the meeting code and the meeting password, how do you can't keep them away if they got the meeting code, the meeting password. So I don't know. Any other questions, guys? Please ask as many questions as possible. You're not going to get it all in one day, but at least you know where I'm at as far as thinking is concerned. I'm looking in a good market. I am looking to do a lot of swing trades, a lot. I'm looking to repeat this little burst higher as many times as possible. I don't want to sit through these corrections. Like for example, here's a perfect example of what is pretty much almost an A setup. Big up day on heavy volume. You get the consolidation, and look what happens at the very end. There's that inside day on very low volume. As a matter of fact, let's see here. Volume 10 million, 5 million, 2.6, 2 million. You see how you get a contraction in price, you get a contraction in volume, and here you got 2.3 million shares. And what happens? Off to the races, you get a nice 3-day move, then sideways action. Here, 318, same thing. Just going sideways, 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 and then finally it just took off. And you can see all the notes I have here of Zoom. MA hugging, down 3 days in a row. Here's pretty much a little up candle. The trigger would have been right here. So this is where it comes from. This is where the scans come from, okay? And you'll be able to pick up a lot of things by just going through charts and writing some of the commonalities, okay? And making sure that you understand and know what works best within your time frame, not your desired time frame. We all have a desire to just buy 2 stocks that go up 1,000%. But if that's not your time frame, and you haven't held the stock for for over 6 months in the last 7 years, then that's not your time frame. That's your desired time frame. You got to go with what you do, actual trades. All right, guys. Hope you enjoyed it. You have any questions? How much of what we're seeing on your chart is stuff done outside of? How much of what we are seeing on your charts is stuff done outside of TC 2000? I don't do anything outside of TC 2000. So everything is here. Everything. So all the scans are here. So there's nothing that I do outside of TC 2000. There's nothing that I do outside. I mean, the only things that I do outside of TC2. So let's say, for example, I'm going through the insider buy list. I'll go to Finviz. I'll go through the insider filings, and I'll just write notes on here. I'll write notes like, for example, FSLY. Abadel bought another 1.1 million shares between $14 and $16.97. Abadel now owns 3.89 million shares. Abadel is an institution that is a highly concentrated institution. They only have 10 stocks. They only buy 10 stocks, and they go all in. So this is the reason why I know who they are, and I'll write this down because it might make a difference. Okay. So besides that, that's all I'm doing. So if I'm reading something someplace else, I'm gonna make a note here, but this is it. This is what I use. And again, I think that for what I do, and based on my beliefs, this is what I need. If I wanted to get into stories or earnings, or if I needed to know those things, then this is not good for that. Although it says here EPS, plus 29%, EPS and sales is not as good as they lay them out on MarketSmith, and as great as they lay them out as Zacks. But if you need to use those numbers, then this is not it. But if for trading purposes, and for you to be able to do things like, for example, we have a down market. Let me go back to 2018 when we had a similar market. Let me see what did well, what did the best coming from the bottom. And then you can do that with this, okay? Sort a new window. Let's move this to the left. So now I have the best performance stocks within this little time frame here, which is from 1227 to 52, this initial move. And you can do this. You can do this in TC 2000, where you can't do this in a lot of other places. I'm going to go back to that time frame, which is right over here. And here is Axum or Awesome, whatever this is. Here, this was an A setup. And this was I believe one of my stock of the week, whatever, where you have a stock that was trading 90,000 shares. News comes out, trades 51 million shares, goes sideways for a bunch of days, And here the candle starts to tighten up. And here, right over here, you almost have an inside day, or this is almost an inside day on 354,000 shares. And then the stock goes from 839 up to, goes up 20%, 25%. Okay. So this is an example of the A setup. Okay. And this was, I got long here on the second move higher. I missed this one here. I'm not sure why, but then you have CFMS. Again, stock, trading at 60 cents. You would have missed this initial move higher, but then you would have caught this move right over here, down multiple days in a row, and then through the high, off to the races. CFMS, okay? And this little pattern right over here, and the AXSM, this is the pattern that I go over and how I find swing trading ideas that I always post in the room. This is it right here. Move higher, fresh momentum, sideways for 10 to 15 days, contraction at the very end, off to the races. Okay. SPI, same thing. Here's a big move higher, a big volume. You don't chase. You wait for that contraction, that sideways action, and then goes up again. So here you get a feel of what actually works. So back in December 2018, when we had that 20% correction, so far what we've seen that the best performing stocks were stocks that, were trading near lows, right? We haven't seen a well-known stock yet. Now I can go out there and put more filters. All right. So let's say, for example, right now we have the best performance stock, AXSM. Let me just go out there and put some other filters that based on whatever you believe in. Let's go price over 15, and you can do all type of different filters, and that would change the list for the most part. If I went back and put it had to be above 15, back in December, this list will be completely different. If I went back and I put they had to earn a certain amount of money within this time frame, this list will be continued different. Is that the correct list? Is that the right list? I don't believe so. Now, filters should be put in. Filters are, for the most part, relative, right? It all depends. If you have a large size account, you can't be fooling around with companies that don't trade much volume, because you can't buy the proper amount for the most part, to make a difference for the most part. All right. So that's when some of these filters come in. But, these filters, just to put filters on, that doesn't give you the whole story. So you can go back. So this is why TC 2000, in my opinion, is great. Okay. If you wanted to go into, here we have the stocks down 3 days in a row or more and up to the previous day high. If you wanted to go out there and study the scan for the last 45 days or whatever, last 95 days, just put within 95 bars, and it gives you 2,194 names printed this in the last 95 days. And this is how you build a pattern library, okay? This is how I came up with the scan. This is how I came up that the stops should be like this. They should be raised. And if they don't work out like it did here, down multiple days in a row, and then you get a pattern of higher highs and higher lows, and then get rid of it once it breaks that pattern, that's the way it normally works. You can see that over and over and over again, right? Here, that's how it worked. Here, just a little bit. Here, that's exactly how it worked. APT, that's how it worked. CNQ, for the most part, that's how it worked. Here, BCEI, right here. 1, 2, 3, finally broke that pattern on this day. SU, broke the pattern on day 3. So that's what you can do with TC 2000. Okay, you can do that with every skin. You can do that with the inside day. You can do that with the inside day. You can do that with everything. Do you have videos on how you set up? Do you have videos on how you have set up other types of screens? What do you mean, other type of screens? Scans? I don't have. I don't think so. But what I've done is that if you have TC2000 and you want my scans, you email me so I can have your email address or your username, and then I can send you the scans via TC mail. Here, scans. I've been sending these scans, sent items. I sent these. I'll just send out the scans for you, layouts, scans, and you can have them. You can have them. So just all you have to do is email me your username or your email address that you use for TC2000, and I will email you these scans. And then once you have the scans, then we can go over what they are. All right, I gotta go, guys. I hope this helps, and I'll see you guys back in the room. All right.